93 HD3 Millville.
Moving migrant children. I'm Chris Foster, Fox News. Most of the 300 kids held at a Border Patrol station in Clint, Texas, are now at another facility. Attorneys who visited say those children were dirty and underfed, with older kids trying to take care of the babies and toddlers. Meantime, there's a House bill being considered to provide more assistance for migrants at the border. Live in Washington, Fox's Rachel Sutherland.
Chris, President Trump has threatened to veto a $4.5 billion border funding bill because it doesn't include money for more detention beds or for the border wall. Acting Immigration and Customs Enforcement Director Mark Morgan told Fox and Friends,
"We need Congress to step up and give us the funding to address this entire crisis."
The president has put off a planned ICE roundup of illegal immigrants, giving Congress 2 weeks to come up with an immigration bill. The clock is ticking as Congress leaves for July 4th recess at the end of the week. Chris.
And Rachel, Iran's President Hassan Rouhani says the White House is afflicted by mental retardation in response to new economic sanctions aimed at freezing assets of Iran's supreme leader and other officials. President Trump's national security advisor, John Bolton.
Threats to international peace and security in the Middle East and around the world are on the rise. Iran's continued pursuit of nuclear weapons, its threats to exceed the limits set in the failed Iran nuclear deal in the coming days.
He spoke at a security summit in Jerusalem. A man who drove into a group of motorcyclists, killing 7, is arraigned today in New Hampshire.
Volodymyr Zukovsky has been charged with 7 counts of negligent homicide. Witnesses say he plowed into a group of bikers Friday night in Randolph, New Hampshire. One of the riders who survived the wreck says Zukovsky's pickup cut a hard left into the group. The trailer he was towing acted like a whip, and as he put it, just cleaned us out.
Fox's Jack Callahan. Stock markets overseas are lower today. Dow futures are down 12 points ahead of the opening bell on Wall Street. This is Fox News.
All right, welcome to F-150 Radio. Call from Georgia. Chad, what's shaking in Macon?
I know the F-150 kicks butt and takes names.
Like how the high-strength, military-grade aluminum alloy F-150 thrashes the competition with best-in-class towing and torque?
Mm-hmm, not surprised. Totally saw that coming.
Chad, how do you know so much about F-150 beating the competition?
I drive the competition. Got a 10-year lease.
Kind of embarrassing, huh?
Maybe I shouldn't advertise that fact on a national talk radio show.
Good call. The Ford F-150. It doesn't just raise the bar, it is the bar.
Best-in-class claims with properly configured vehicles. Class is full-size pickups under 8,500 pounds. GVWR based on Ford segmentation.
Now get a 2019 F-150 with 0% financing for 72 months, only at your Ford dealer. Not all buyers will qualify for Ford credit financing. 0% APR financing for 72 months at $1,389 per month per thousand finance, regardless of down payment. Program number 21040 on 2019 Ford F-150. Not available on Raptor. Residency restrictions apply. Take new retail delivery from an authorized Ford dealer stock by 7/1/19. See dealer for qualifications and complete details.
A few showers and thunderstorms possible for South Jersey this morning. Then you'll catch breaks of sun this afternoon. It's going to be very warm again and summer-like with a high temperature around 86 degrees. Clearing skies tonight and slightly less humid, low of 68. Mostly sunny and very warm tomorrow, 87. We really get cooking through the second half of the week. Mostly sunny and 90 degrees on Thursday, 92 on Friday. With a mix of sun and clouds, could be a late day shower or thunderstorm Friday too. I'm Chief Meteorologist Dan Zarrow on WPG Talk Radio 95.5.
From Harry Hurley Way in the world's playground to the broadcast pioneers of Philadelphia Hall of Fame.
I want to congratulate my friend, Harry Hurley.
You're about to find out why Harry Hurley has been named to the Talkers Magazine list of the 100 most important talk show hosts in the nation. Live from the studios of Town Square Media in Northfield, it's Hurley in the Morning on WPG Talk Radio 95.5.
Welcome back. See you, Kirk. Have a great day, my friend. Chuck Malamut is here. The following program is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed are those of Chuck Malamut, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck, before we get into all about your financial matters, and I know that there's a lot to talk about, I want to take this opportunity to thank you. I want to thank your staff. It's a busy time of year for the Hurley in the Morning charity, and we just want to remember to say thanks.
Harry, you're welcome. I'm awfully sorry
You were away on business.
We were away. It was a little bit of pleasure, a lot of business, but the good news is you had an exceptional tournament. I mean, we spoke about it, and I've heard about it from others. And I guess the best news is that I've now converted, Harry, in a relatively short period of time from a long-time Philadelphia Phillies fan to a Los Angeles Dodgers fan. What can I tell you?
And not just because they have the best record in baseball. The Yankees are very close, about a game behind, but they are an exciting team. You might have been a little surprised at my knowledge base of the Dodgers, because when Chuck and I spoke the other day, I was able to say that 3 rookies, 3 consecutive games, walk-off home runs to win the game, first time in Major League history. So it isn't just the big stars. I mean, the Dodgers are getting it done.
You know, Harry, what was the most amazing thing? I mean, we were there Friday night with a 2-run walk-off. Again, Saturday, and then Sunday, they imagine a player by the name of Will Smith playing in Los Angeles.
Was he getting jiggy with it?
No, he's been back and forth, up and down a few times. So they love him there, and they called him up. He was playing in Oklahoma City.
He got in like a couple hours before the game.
They flew him up Sunday morning. It was an afternoon game, and he pinch hit in the bottom of the 9th, and the game was tied, and again another walk off, and it was just. It's incredible, but I think just the enthusiasm, the ballpark. If you haven't been and you're a baseball fan, there's 3 places to go. Obviously, Fenway, Wrigley, and Dodger Stadium, and once you get into understanding how the facility was built and how long it was built, it was really way in front of history, so to speak.
What was the traffic like going to the game?
It was traffic. I mean, it's you have to. It's like anything else. Was
it terrible traffic?
No, it wasn't terrible. It's a big city.
Yeah.
There's a lot of people. It's a sprawling city, and it's like anything else. If you have to give yourself enough time.
Are they packing in sellout crowds at these games?
It was busy. It was packed. Yes.
I'm thinking, I know it's not the same, but the Lakers during the era, Pat Riley, Magic Johnson, James Worthy, that particular era, Showtime they called it. Is this like Showtime?
No, it's actually not.
Okay, so it's not that.
It is. It's pure. It's baseball at its finest moment. It's pure, exceptional players. Team players. I know there's a lot of controversy. I came back and we're hearing all kinds of things coming out of Philadelphia. Fortunately, they did win last night, but it's the wheels are kind of falling off the bus, and it is a long season, and there's no doubt about it. But there's no doubt about it. It's 2 different worlds. So I just have to get my clock set where it's really tough to watch a baseball game that starts at 10 p.m. Eastern during the week. So
now
we'll figure it out.
Somebody that I have to protect, I will not say who sent it to me, but during your conversion, someone called you a bandwagon jumper.
You can call me that. Yeah, maybe that's fine. But the bottom line, look, I was never there before.
Yeah,
and it's like when you go and experience something.
Yeah,
chances are, and you make a comparison to where you've been.
You fell in like with it.
Oh yes, absolutely.
I told you the Dodgers are very high in my esteem because Joe Torre managed them for 2 years, and I like the team. I like what they've done. I think they've been very smart in how they've developed their talent, and they're doing what the Yankees used to do, and then the Yankees stopped doing it, and now the Yankees do it again. They're doing a lot of development of young talent, which I think makes a lot of sense. But you just had
so call me a jumper and a bandwagon buster. But the bottom line is, I think what's happening in Philadelphia really needs to take a page out of the playbook of what I witnessed this past weekend, and I'll leave it at that. How's that?
That's fair enough. And you've been to both now, and it's noticeably different.
There is absolutely no comparison. How's that?
That's fair enough.
Okay.
It's good stuff.
So,
market update.
Harry, as you know, last week, and I know you and Kirk kind of talked about this, a little bit in the last hour, stocks rose again last week. The expectations that the Fed rate cuts following last week's meeting, are persistent that they're out there. It's just a matter of how, when, and what magnitude. U.S. and China, we'll talk about G20 as we get into our conversation today. Maybe we'll come to some kind of trade agreement. I know, although we have kind of talked about it, and guess, a little leery of that even potentially happening. The S&P was up 2.2% last week, and we pushed through that 2,950 point range for the fourth time in the last 18 months. Cyclical stocks, energy stocks, technology, healthcare led the way. Defensive areas such as utilities and REITs, lagged a little bit. So,
are we at all-time highs?
We're there. We're very, very close. We punched through it. What's interesting here is the fact that all U.S. markets as of Friday, S&P up close to 19, the Dow up almost 16, the Nasdaq up over 20.
Is this the Rodney Dangerfield sort of situation, though? Because I don't see it getting a lot of respect.
Well, I think it is, because what's happening is that virtually every strategist that you follow and listen and watch, and we'll talk about this in a little bit, why you should not be buying stocks at this point in time. But, we're at a point in time, we're sort of at that quiet period as we get to the end of the month. And we're going to see earnings probably within the next 2 weeks, and that's going to be really the telltale sign if what was Q2 all about? Because the tariffs were in full force, and I know that we've talked about this in the past, and I think our president, either chooses to ignore it or does it on purpose. But the bottom line is that supply chains are now moving, out of China, a lot into Vietnam. And you just can't pick that up and do that in a day, and that's very, very disruptive for businesses to be able to operate and run a business. But you and I and everyone that listens on your show as consumers are paying more.
It's interesting that you raised Vietnam, because I guess time is just going so fast. A couple of months ago, John Zarek spent a rather extended period of time in Vietnam, and it became so apparent to him that they were stepping up their game in terms of trade and the economy.
Well, they have, and our mutual friend, Paul Steelman, who travels extensively, I oftentimes ask him, where is the best place to be? And he goes, well, right now for sure, it's obviously not China, and hasn't been China for a while. It's Vietnam. So,
and I'm telling you, John Zarek said that.
So you kind of take a page out of that playbook, and
for Paul to say that, he's the gold standard. For him to say that, it's real.
Yeah. So I think what's happening is the fact that we're going through some crazy times right now. There's no doubt about it. Interest rates, corporate profitability, tariffs, tensions, Iran, and all the reasons that you as a potential investor saying, kind of put the brakes and say, whoa, I'm not going to buy stocks right now. I'm going to sit and I'm going to wait. But
yet that's not. Nobody seems to be bothered by it.
Well, I think they are, and it's we oftentimes talk about sleeping with one eye open, and I think we're clearly here right now. It's the fact that you don't want to wake up in the morning and either turn on the TV or look at your phone and look at some sort of major sell-off happening overseas. But I think right now there's probably a tendency that all of us are just a little skittish, and we're just sort of waiting here as to where we're going to be. Harry, and again, we're going to know in 3 weeks' time. We're going to know for sure, and the market's going to tell you very, very quickly. Right, wrong, or indifferent.
So if these earnings come out and they're not what we hope they will be, then something's going to get hammered?
Well, no. I think that with all the cold water that's been thrown on the market, it's going to come as no surprise. And I don't know how many we've had multiple corrections over this long-standing bull market. 5%, 10%, a few over 10, but the bottom line is that there's still an enormous amount of cash on the sidelines ready to be deployed. As for instance, I know that you follow, the casino world. I mean, El Dorado taking out Caesars, taking out Caesars yesterday.
What'd you think of that?
Another deal today, Aviv buying out Allergan. But back to the Caesars deal, I mean, it was, I'm not going to give an opinion on the company. I'm not allowed to do that, as you know, but certainly a company that has struggled financially for a long time that needed somewhat of a rescue. And, for Carl Icahn to actually compliment the board of directors, and I heard that yesterday, that is like a one-off that never, ever happened. So he obviously, as big shareholder, likes the deal, and it's something that I think is very much needed for the company. But the question is, it goes back to, here specifically in Atlantic City.
El Dorado is the largest gaming company that there is now?
No, MGM.
Okay. MGM,
Las
yeah.
Vegas Sands,
That's
Wynn
true.
Resorts. I mean, there's,
Encore.
If you go up and down the strip in Vegas, the majority of the one side of the strip where Caesars is located is basically MGM. They concentrated a lot of their assets in that town, and with this El Dorado deal, you think about Tropicana and all the Caesars properties. So you do have a concentration here as well. And certainly, as you've gone into great lengths about this market. While it has improved, are we still in that cannibalization area, or are we actually growing the business? And I don't think we're really growing the business the way we need to grow the business.
Excellent analysis. We're going to come right back. Brief time out. You're listening to Chuck Malamut, the official financial advisor for the Early in the Morning program. For all of your financial planning needs, turn to Chuck Malamut, the Malamut Group, Morgan Stanley's Northfield, New Jersey office. Chuck Malamut, Managing Director, 609-383-2010, 609-383-2010 for all of your financial planning needs. If you haven't downloaded the app, good time to do it right now.
The WPG Talk Radio app is everything South Jersey. Local news and information updated around the clock from New Jersey's largest radio news team. Breaking news push notifications just for South Jersey. Easily call and listen to all your favorite WPG Talk shows and more. Download the WPG Talk Radio app for your phone, tablet, Apple CarPlay, and Android Auto today at WPGTalkRadio.com.
Paul D'Amato.
Harry Hurley.
Paul, I know our listeners want to know what's new with the D'Amato Law Firm.
Things are great, Harry. We are so privileged to represent our clients whose lives have been turned upside down because they were involved in a serious accident. We meet on a regular basis. We copy our clients on all our correspondence so they always know what's going on with their case. We try to treat them like family. We have Alexa here, my daughter. I'm so happy that she's here. We have Steve Van Natten and Casey Gifford. We're a great legal team.
They're the D'Amato Law Firm for all of your personal injury legal needs. Turn to the official lead counsel to the Early in the Morning program for more than a quarter of a century. The D'Amato Law Firm in Egg Harbor Township, 609-926-3300. That's 609-926-3300. Tell Paul, Alexa, Sandy, the entire team that Early in the Morning sent you.
It's the Honda 4th of July sales event happening now at Rossi Honda. Hi, I'm Ron Rossi, and Honda has $500 loyalty or $500 Conquest cash on CR-V for you. Thinking of buying an Odyssey or an Accord? $750 loyalty is available. And don't forget, this is in addition to all Rossi sale prices. Come and get yours. Ends July 8th. Don't delay.
Certain qualifiers for these incentives. See dealer for details.
It's summer sales time here at Rossi Honda. You can lease the best-selling SUV, the 2019 CR-V LX all-wheel drive for only $199 a month. Looking to buy? 1.9 APR available up to 36 months. And don't forget, the oil changes are on us, up to 5 years or 60,000 miles. At Rossi Honda, we treat you better, period, for less. On Delsey Drive in Vineland.
$31.95 down, tax, doc fees extra. 36-month lease, 10,000 miles per year to qualify buyer. See dealer for details.
Let me ask you a question. question. How do you feel about genetically modified ingredients?
Don't like them.
Artificial flavors and colors?
No thanks.
Clean ingredients.
Now that I like.
When you care about what's in things and what's not, shouldn't your vitamins be clean too? Sundown vitamins are all clean all the time. Non-GMO, free of gluten and dairy, with colors and flavors from real food. We even have USDA certified Sundown Organics and kids vitamins too. When you're living clean, choose clean with Sundown Vitamins at supermarkets, drugstores, or on Amazon.
I'm Tiffany Haddish, and I use Groupon so much, they made me the spokesperson. It's summertime, and you gotta find your kids something to do because an energetic kid with too much free time can land you in small claims court. Luckily, Groupon has deals on movies, bowling, escape rooms, amusement parks, and all kinds of things kids love. Save up to $100 a week on what you do every day this summer, like getting those kids out of the house. Download the app and save. Groupon.
Credit Karma can help you make financial progress by giving you free scores, reports, and monitoring. But Credit Karma does not give you the love that only a mother can. It's just an app.
I miss my mom.
But you can use Credit Karma to help you improve your credit. But it cannot solve the eternal questions surrounding the human condition.
Oh, come on, I need answers.
But signing up is free. No credit card needed. Just download the Credit Karma app now.
Oh, there's my answer.
Credit Karma. Here's to progress.
Sean Hannity this afternoon at 3. Now, Hurley in the morning on WPG Talk Radio 95.5.
We're back. Chuck Malamut continues at 21 minutes past the hour, all about your financial matters. Tom Foley will join us in studio for today's 9 o'clock hour. That will be interesting. Without any doubt, I can say that because Tom is conversant on many important issues, local, county, state, and national as well. Where are we at?
So let's talk a little bit about the Fed and interest rates. We just sort of did a real quick summation. So, on the near term, it looks as if the Fed's going to take some sort of action. They didn't take action at the last meeting, but we don't think the Fed is as dovish as many investors believe, and that could be an issue with the stock market. The meeting last week and the press conference that followed, Powell did have somewhat of a generally dovish approach. Even though our growth, our economic growth remains, solid, a cut at the July Fed meeting looks more likely than not. But we don't expect an easing campaign at this point in time. We think the Fed will probably go once or twice over the next 12 months. I mean, you've seen, upwards of anywhere from 3 to 5 times. So if we go twice over the next 12 months, and that could, obviously cause somewhat of an inflation. And then, at that point in time, what happens when we have inflation? What's the Fed have to do? They have to go in and increase rates. So I think we're at a point in time right now is, they're damned if they do and they're damned if they don't. And so that's why.
But are we damned because they raised interest rates too many times?
Well, the question is, where is the place where we are now? And we're going to know this, I think, Harry, like I said before we went to the break, we're going to know this very, very quickly in the next, 2 to 3 weeks, whether, where we are with respect to the economy. So, having said all that.
This is based on earnings reports?
Well, you have earnings. And, one of the things that we talked about, and we'll talk about it right now, is manufacturing.
Mm-hmm.
Manufacturing continues to soften this year.
Why?
We think it will stabilize at the end of 2019.
Is this the trade stuff?
You've had escalating trade concerns. You've had tariffs that's put, downward pressure on the sector. We think these trends are going to continue. But also think manufacturing data will bottom and we will recover over the next 6 months or so. So it's not the end of the world, but it's certainly something I think your listeners need to be made aware of.
Sadly, long term, I still feel it's the right thing to do. Short term, it's self-inflicted.
This is very much self-inflicted. Yeah, I mean, look,
I got to give the president credit, though, because...
But you're not going to give the president credit when you're paying
15,
18, 20% more for a product that you bought just 6 months ago.
Hey, listen, a friend of mine just posted yesterday, I'll protect his identity, even though he made a public post about it. He paid something like $1,500 more for something than he would have. and this is what it's about. So I hear you. The only thing I will say, though, is if he does achieve an excellent, or however you want to describe it, very good, some kind of good trade deal with China, then we always said from the beginning, even before the pain was there, short-term pain, long-term gain, and back then we were in agreement that it was worth it. Now we're having to live through it, and do we not like it? How do you get to the finish line if you don't run the race?
Look, this has been ongoing for how many years? Forever.
Yeah.
So now the G20 is right in front of us. I mean, it's this week,
and
right?
The president will meet with President Xi. Do our financial markets expect any progress?
So, I mean, the financial markets would certainly like, a positive outcome and a deal getting back on track and getting signed. But I think if we use the word moderate, that would probably be the right word at this point in time. We could see some moderate easing in trade tensions at the G20 meeting. We're not terribly overly optimistic, Harry, at a real comprehensive deal, because you think about, our president here, their president there. I don't think that President Xi's just going to roll over and say, "Okay, President Trump, we're going to go ahead and do this for you." So,
I don't think their pride alone will allow.
Well, look, it won't. They're going to continue to negotiate. That's the good news, in all likelihood, unless something happens as they get to the table, so to speak. Which it's so that in itself is obviously somewhat positive. We could see somewhat of a near-term commitment, by us, the U.S., to temporarily refrain from raising tariffs, but we don't expect much beyond more than that at this month's meeting. So, longer term, we're going to hold out some hope, Harry, that the two countries will come to a more formal deal later this year or in 2020. Obviously for President Trump, he would, if he were able to get this accomplished, and the timing of this as you get to the runoff of the 2020 elections, he might be willing to, make some concessions, Harry. He's, him, you work with him, you understand him.
Well, he wants to win.
He wants to win, but is it win at all costs, or is it win and I'll take somewhat of a compromise here in order to increase my chances of getting reelected?
And that's the Trump, that's the President Trump that I know.
A year and a quarter from now.
Yeah, he's very capable of doing that. That's why he called off the ICE raids. Nancy Pelosi came to him and said, "Would you please hold off on that?" And said that she would negotiate in good faith. The president called it off. The president was going to strike some kind of target in Iran, called it off. I think he's very capable of compromise. He doesn't get credit for that, but I think that's really his nature, even though most people probably would not necessarily initially think about him that way. This one on your list intrigues me to no end, especially because the fingers of a 40-plus year professional typed these words: to buy or not to buy stocks. I'm interested in your answer.
So look, we always have a bias and the reasons why you should buy equities. And you think about this for a minute. The S&P on average has returned 8% a year, but it never, ever, ever returns 8% every year. And if you look at what has been accomplished, so far this year, if we kind of kiddingly say this, if we were to close the books right now for 2019, I think all of us would be very, very happy. Mm-hmm. But having said that, there's several reasons I think that you really need to be cautious here with respect to going all in to buy equities. We are, as you mentioned before, with the upper end of the range. We've been there. We're holding that. The questions we're going to be able to sort of punch through. And again, all the strategists that we listen to, and they're all pretty much on the negative side of the camp. And I think, look, you've been with me a long time, and typically what happens when everybody goes to the left side of the boat, you know what you need to do. You need to be on the other side of the boat.
Contrarian.
So we've already priced in the fact of with respect to lower interest rates, and that's been sort of evident and it's out there. So a cut or two is already reflected in current stock prices. So if they don't go with more, the market's going to not be happy with that. The Fed does have some capacity to ease rates. Most other central banks throughout the world, are either at close to zero or zero rate policies. I saw, late last week, Harry, the German Bund, I think it was a negative 37 basis points. So imagine you buy the equivalent of their treasury and you hold it to the end, you lose money. I mean, how crazy is that? Why would I don't even know why you would do that, but institutions and individuals do that. So, there's not much more that I think the central banks can do at this point in time. We talked about U.S. and China. They're, with respect to their trade agreement, we don't think it's going to. They're not coming out of the G20, and it's going to be done. As we mentioned before, corporate management teams at this point in time, are becoming very, very defensive with respect to a prolonged, trade war and pushing through now those costs to you and I and everyone else as consumers with respect to goods and services. Global growth, there's certain parts of the world where we're doing better than other parts of the world. So that landscape, remains somewhat uneven. Remember a couple of years ago, global growth was going to be synchronized. It was going to be together. We're all going to grow at the same pace, and unfortunately that is not happening. And corporate earnings expectations are going to continue to look to be declining in certain parts of the world. And as I mentioned to you before, stocks, look to be fairly well priced at this point in time, especially given the increase in prices that we've seen over the last few weeks. Now, I don't know if you remember, but I think there was, a hint last week of some positive news coming with respect to the G20, and stocks had a huge day.
Yes.
And, think about it, we're up, like I said before, we're up 2.2% for the week.
Chuck, we're going to go to the halftime break, but I wrote a question that's not on your list that I want to chew over for 2 minutes. Then we'll get the break, and then we'll come back to the next question on your outline. Senator Bernie Sanders has introduced a $1.6 trillion, I'm calling it boondoggle. Although I have to say, selfishly, I wouldn't mind. Be wonderful to have all student loans and all Parent Plus loans forgiven. And then, of course, add a tax on Wall Street transactions. What an incredible crock this is. How in the world? I mean, they say these things that blow my mind. What do you think of the senator's plan?
Well, I think the senator right now is not in the lead.
No.
To become
he's throwing a Hail Mary.
To become the nominee.
Right.
And for sure, this is a stretch at best. So you're going to cancel out all this debt.
Yeah.
And then you're going to, on a go-forward basis, it's going to be free college for all.
Right.
So
what about all the people that paid?
Well, that's what I was thinking.
Yeah,
you paid, we paid, a lot of your listeners paid. So they're going to write you a check,
reparations,
and say, "Here, Harry, thank you very much."
Yeah, it's not part of it, but it should be. If you're going to go that route, then you have to pay reparations to everybody who paid.
But how far back do you go?
I know.
Do you go
forever.
Back for eternity?
We're talking about going back over 200 years. So yeah, sure. So it's really. It's
I read
very
this.
unworkable, isn't it?
I read this, and how do I put this in a nice way? I laughed.
Yeah, it's not serious.
It's not. It can't be serious because.
But he is serious, though, because after all, he says the American people bailed out Wall Street, so Wall Street has to bail out the American people. I mean, this guy is crazy. He looks crazy when he says it.
Before we go to the break. Over the weekend,
not a bad imitation. By the way,
no, it's very good. Over the weekend, we took a step back in time and spent about a half an hour and watched Network.
Oh, I love it. Oh my God!
And we cut to the scene.
I'm mad as hell, and I'm not going to take it anymore. Open up your window, stick your head out the window, and just yell, "I'm mad as hell, and I'm not going to take it anymore." He's in his trench coat. Oh my God!
And the funniest thing, we were watching with our friends and my son said, Now I get it. I can connect the dots.
See?
I've seen the skits, but now I understand where it came from.
There you go. Chuck, was it a really rewarding time around all the beautiful people? Was it a great time, Chuck?
Harry, let's go to break.
Ladies and gentlemen, Chuck is the least pretentious person that you'll ever know. I just couldn't resist. He's on the left coast, 3,000 miles away, with all the pretty people, all the beautiful people. We'll be back. Don't try this at home. I am.
Your home for Hurley in the Morning and me, Sean Hannity, right here on WPG Talk Radio 95.5.
The Auto Plaza at English Creek. Roll with Mr. Tire.
This is Harry Hurley, and I'm with the Mayor, Charles Kane, owner and operator of the Auto Plaza Egg Harbor Township. Mayor, tell your listeners who are looking for a car, why should they choose the Auto Plaza?
Harry, it's our full-service department, selection, and hassle-free financing alternatives that have set us apart for over 17 years. Over the years, we've been the recipient of many sales and service awards, as well as receiving an A-plus rating with the Better Business Bureau. It's been a real honor for us. We are now serving a second generation of sales and service customers. Stop in today. You're going to love our staff and experience what makes us different.
For all of your automobile service, parts, and sales needs, call the Auto Plaza at 609-646-2447. That's 609-646-2447. And visit us on the World Wide Web at myautoplaza.com.
The Auto Plaza at English Creek. Roll with Mr. Tire.
Ike was such a sweet, lovable animal, and people would want to pet him, and they'd come up and they'd get close to him, and it would be this instant, oh! My dad didn't want to touch him. It's like, ooh, get the stinky dog away from me.
Even after we'd give her a bath, she would still stink.
Very stinky, both bad breath and bad gas. I asked the vet, and he said some dogs are just stinky.
Does your dog itch, scratch, stink, or shed like crazy? Come to Dinovite for help.
DINOVITE.com. The omega-3 fatty acids, flaxseed, zinc, alfalfa, the digestive enzymes that are cooked out of regular dog food.
The ingredients convinced me that it was definitely worth trying. After about a week, he started smelling normal. My husband and I were really kind of astonished.
Dinovite is nutrition.
859-428-1000.
DINOVITE.com.
This is a special alert to all Americans who own a vehicle with less than 200,000 miles with an auto warranty about to expire or with no warranty coverage at all. Due to a decline in the economy, Protect My Car is announcing a low-cost extended service plan that is now available to the public to save any driver out-of-pocket expenses on auto repairs. Call now to find out how you can pay nothing for auto repairs. Yes, you heard that correctly. Pay nothing for auto repairs. An open phone line has been established for all drivers to call for a free quick quote. Call 800-798-5173 now. Drivers who are covered by Protect My Car will not have to pay for a covered repair bill again. This auto coverage is at an all-time low, much lower than what dealerships are charging. Additionally, drivers who activate this auto coverage today will also receive free roadside assistance, free towing, and free car rental at no additional cost. Call Protect My Car for your free quick quote today. 800-798-5173. 800-798-5173. What do you have to lose? Again, 800-798-5173.
Markley and Van Camp this afternoon at 1. Now, Harry Hurley on WPG Talk Radio 95.5.
Hey, thanks very much. 38 minutes past the hour. Tom Foley is making his way right now to our palatial studios. He will spend the 9 o'clock hour in studio. We want to thank Tom. He purchased 2 items in our Hurley in the Morning charity silent auction and also fielded a foursome. We're very, very appreciative of Tom and his longtime support to our charity. And Chuck, I say the same to you. Your support has been from second one, not day one, second one. And you also know the numbers.
I know Kirk Conover has those golf balls. He has saved them all. He hasn't lost one.
Nah,
it's amazing.
He hits them straight, not too often. So he's 3 times 12 years. He's got 3 dozen. He's got them saved up. He's never lost one, and they're still in the boxes.
What a humbling game. You and I should try it one day. Can you imagine?
Chuck, you and I on the golf course.
That would be something. They'd have to clear the place.
I played a few times, and it's not pretty. Year-to-date 2019, you regaled a little while ago. We would close the year right now, right?
So think about this for a second. As we get to the end of the quarter here, as of last Friday, the S&P was up 19%. We'll call it. Over the last 25 years, the S&P has produced an average gain of 9% per year, 9.1% per year. The first 6 months of the year, Harry, January through June, have gained an average of about 4.4% over the last 25 years.
By the way, the president said this a few days ago. Is this a record June all time?
This was
Yeah.
You think about where we've been this year. Came out the end of last year, Christmas Eve day. That was sort of the bottom that we hit in December. Followed up by 4 very good months, January through April, with just an awful May. May was probably one of the worst Mays in history that we've seen, followed up by an exceptional June, one of the best Junes that we've had. So, that statement is absolutely correct. I mean, June has been a fantastic month for the equity markets. There's no doubt about it. So,
what is your analysis? And I know you don't get political, but from the financial standpoint, year 3 of President Trump's first term.
So right now, 2019, it's the third year of the president's first 4-year presidential term. So that's kind of assuming that
there's a second term.
There's going to be a second term.
Yeah, I like the way you said that.
So the average return, looking back over the last 23 third-year presidential years, we've had a gain of roughly 16%. Total return. That's appreciation and dividends with respect to stocks, and that goes back, Harry, to 1927. So you think about it, it goes back to the Great Depression, the Great Recession. The last time the S&P 500 was actually negative for a presidential third year was in 1939, or 80 years ago.
Mm-hmm.
So where are we now? Think about what we talked about: S&P, Dow, Nasdaq.
Records.
Incredible years year to date. So if the year were to end, unless something really, really drastically happened, I think we're in pretty good shape at this point in time.
Fantastic. Crystal ball. What happens to interest rates?
I always find this interesting as you get to the end of the year. All the strategists and analysts that are paid a lot more than you and me come out and they make their predictions. They make their predictions with respect to stock prices. They make their predictions with respect to bond prices. So 10 of the leading strategists at the end of last year, basically came out and they said, okay, here's where we think the yield curve is, or the 10-year Treasury note is going to be at the end of December of 2019. So all of those individuals that made those forecasts,
they were not very optimistic about 2019.
Well, no. They thought that interest rates would be higher in 2019 when they were at the end of 2018. Okay. So at the end of 2018, the 10-year was yielding 2.68%. The predictions ranged anywhere from 2 3/4 to a high of 3.6%.
Wow.
And instead of rising, as we look now, the 10-year actually went below 2 for just a short period of time, but right now is trading around 2.06%. So if we ended the year right now, think about how wrong we would be, or how wrong those strategists would be with respect to interest rates.
But they also did not predict that Tom Foley, Chuck Malamut, you guys know each other. You've been dinners together and golf tournament. They did not predict anything like 19% or anything like this for the first half of the year.
The year was going to be high double digit or high single digit, low double digit. And, obviously we are where we are right now. So, things are a lot different than everyone had predicted. So it's just sort of a, word of caution, I guess, is the best way.
Here's one that we need to look at, because we talk about the China issue with trade and all of that, but China holds a lot of debt, correct?
Well, they do, but what's happening is, and there is some thought as to if China doesn't buy our debt, who's going to buy our debt?
But of course, if they didn't buy our debt, it would be to their own detriment.
It is to their detriment. They need to buy our debt.
Yeah.
So the high water mark was $1.2 trillion, and that was back in August of 2 years ago.
Close to being a landlord.
But they are the landlord.
Yeah.
But what has happened of late because of trade and tariffs and tensions, that has decreased by about 7.5% to roughly 1.1 trillion. I mean, they're not going away, but I think it's something that we obviously need to be concerned about. If the Chinese, I don't think they're going to flat out refuse to buy our debt, but sort of go on a buyer strike and say, okay, we're not going to buy anymore. And the fact of the matter is, we just talked about rates. I'm not so certain that what is the inclination to go buy a 10-year bond at slightly over 2% at this point in time.
No incentive to do that. Every incentive to not do that. But we also came close, didn't we, to that inverted yield curve that
that conversation was sort of fast and furious for upwards of a month or so. And not that it went away, but what's happening is the curve still inverts on several occasions, but now that everyone seems to believe that the Fed is going to cut rates.
Right.
And assuming the rates are cut on the short end and the rates remain where they are on the longer end of the curve, then what happens? The curve, it becomes a more normalized slope on, that sort of that, upward, movement. It's not a 45, but it's close to a 45-degree angle. And at that point in time, because that's out there, it hasn't happened, that, everybody sort of backed off and said, okay, the curve will slope, the curve will flatten out or continue to flatten out, the curve will not invert.
Chuck, and I know you won't like the way I'm going to say this, but I know it's accurate. You can disavow it and stay pure, but the president taking Chairman Powell to the woodshed and all those pointy-headed goofballs with their plastic pocket protectors flipping out that the president, he's an independent Fed. He's meddling with the Fed. It worked.
Well, I'm gonna take the other side of that.
I knew you would,
because because the Fed is data dependent. It was 8-1 or 9-1.
They're very data dependent.
At the last
meeting, when they're raising rates when Republicans are running for re-election.
No, but Harry, look, at the last meeting, it was I think a 9-1 vote that said we are leaving rates where they are right now.
I agree with the data. I agree that the statement is intellectually honest. But after the president took Chairman Powell to the woodshed, didn't Chairman Powell come out of that woodshed with, I don't know, maybe a new and improved outlook? I mean, come on.
Look, I think from the last, so the president has been
say it.
No,
say it, Chuck.
No, the president has, for the last several weeks, made a point multiple times to say rates need to be lower. Okay.
Remember, too, they leaked that he was thinking of replacing the Fed chair.
Let me finish. He can't replace
Let me finish. You can't. You cannot fire the Fed chair. That's established. I will accept that is established. What's not established is if you could demote the chair. And then Powell said if he was demoted, he would stay on the board of governors.
Harry,
so I'm just pointing out that the president is giving the chair of the Federal Reserve Board sort of an emasculating hard time to make sure that he gets into the mindset of lowering rates and not doing what he did before.
Didn't we just talk about manufacturing?
Yeah.
Okay, and what was the conclusion of manufacturing? Manufacturing is slowing down.
Yeah.
Okay. We are at full employment, and Kirk will attest to that because he's basically talking about U6 and multiple times. But the bottom line is we are at full employment. We need we are seeing the average hourly wage rates increase. There is obviously a lot of concern about that. So rushing out and cutting rates is not necessarily the answer. And I think the Fed did the right thing, Harry, in the last meeting. And
Oh, I expected they were not going to raise, or rather lower interest rates at the last meeting.
But there was a 25%.
Yeah.
Chance.
Yeah.
Or at least those that were betting were saying that rates were going to be cut.
Right. That's a low possibility.
Yeah, but think about
it's not absent, but it's low.
Yeah, but 2 weeks prior to that, it was zero.
True.
So you go from 0 to 25% in a relatively short period of time. That's a big move.
Yeah, I never thought they were going to do it, but I think they will do it.
So you and I will disagree on this one because you think about now. You're talking about.
Well, wait a minute. Before we disagree, though, you don't think the Fed chair changed after the president's involvement?
I think the Fed chair. I think the Fed and the Fed chair became more dovish rather than hawkish, and I don't think it was a direct result of President Trump coming after Powell with a baseball bat. I think I'm going to be
okay.
I'm going to be a little more intellectual with that, Harry, and I'm going to say, listen, it's not that they sit in a room all day and they say, oh my goodness, like President Trump is going to come after me. I think the media is going to say one thing and versus what actually goes on. And let me throw this out there because
but his impact couldn't be zero though.
No, it's not impact. It's not impact zero. But let's think about this. If you have said it on more than one occasion in the year leading up to a presidential election with a Republican president in place, the Fed has on more times than not increased rates.
Correct.
All right. So now we are 15, 16 months out. If they cut rates, then you got to throw that one out of the window.
No. I credit President Trump.
Okay, well.
Because George W. Bush would never say a word. George H.W. Bush would never say a word. They all just took it. This president doesn't take it.
Well, I mean, look.
And therefore, he's going to get a different result.
I think the economy is a different result. So you and I, as much as look, I love you like a brother.
But we were growing at 4.6% GDP.
We have
with George H.W. Bush.
We have known each other for how many years?
Over 40.
99.9% of the time, you and I are going to walk in lockstep. All right, this time
I'm enjoying the split decision.
But this time,
and our listeners know I'm right. But you're the expert.
But this time, you and I, you see, Harry, you're good at a lot of things. All right, I think I'm pretty good at one thing.
There's no question.
So I'm going to disagree with you on that one. Okay,
all right.
Fair enough.
All right. Hashtag Harry's right. Let's get this one in the 2 minutes that we have because I think it's very important, and you do make it this a point of emphasis, Chuck, on your show, and it's really important that you always remember to do this. The American people are not saving enough for retirement, and we're living longer.
We are so far from where we need to be. So the average 65-year-old American right now, male, has accumulated roughly savings that will sustain him for, on average, a little bit less than 10 years. Just short of his 75th birthday, assuming, again, a 65-year-old person retires. But that's a whole other discussion because a lot of people work beyond 65 because 65 is now 55, when you think about it. But
and also because they want to, but in many cases
they
because
have to. Now, the average, so think about this, the average 65-year-old American male now has a life expectancy of 83 years. 83 years. So
that's, in other words, you got to get to 75 to 83. So you got enough to get to 75.
Yeah, so you have an 8-year shortfall when savings run out. So this assumes, and I guess it's a very good assumption, the average male today in retirement needs 70% of their pre-retirement pay. And Harry, guess what? The 70% is absolutely right on because when we do all of our planning with our clients and our prospective clients, we are looking to target anywhere from 70 to 75% of their after-tax pay to maintain a lifestyle during retirement.
Chuck, strict 30 seconds because I'm so interested in this last question. I want you to at least have a chance to talk about it briefly. July 4th, 1776.
The population of the 13 colonies was 2.5 million people, all right, equal to the population of Houston today. So think about...
Now we're like 328 million.
Think about where we are now versus where we were in 1776, Harry. It's scary.
I love it. Best in the business, Chuck Malamut, for all of your financial planning needs, 609-383-2010. A delightful program, even our little mini split decision.
Harry, thanks for having me.
Thank you, Chuck.
Have a good week.
See you. I may do a poll question. Who was right, Harry or Chuck? We'll be back in just. He's put his headset back on.
But Harry, let's put. So you are. I'm on the show with you for less than 1 hour, and you carve out the real time, we're probably like 40 minutes. And you compare it to how many hours a week you're on?
Well, I wasn't looking at it that way. That's conflation.
But is that really fair? You're going to ask the question. You're going to ask a question on Wednesday. You're going to ask a question Thursday. Ask the Friday. Oh yeah, Harry, you're right. And Chuck's not even here to defend himself. So Harry, I don't think that was really fair at all.
I appreciate.
You have a wonderful day. I love you, buddy.
Thank you, Chuck. I appreciate the admonishment. We may still do the poll question.
Hurley in the morning. WPG Talk Radio 95.5 FM and 1450 AM.
Health Update with Robin Stoloff, brought to you by Integrity Physical Therapy and the law offices of Richard A. Stoloff, Linwood, and Philadelphia.
New technology is helping our pets heal in many ways. Here with more is Dr. Mark Newkirk of Newkirk Family Veterinarians. So what are some of these new technologies?
Well, the two major ones we're seeing are laser, which has been out for a while, and pulsed electromagnetic wave therapy, which has been around but really hasn't been brought to veterinary medicine. The two work differently, but they can work together in reducing pain, inflammation, swelling, and especially if we have nerve injuries or wounds that won't heal. So these are great things that we can add to our traditional medicine to help our pets feel better.
Good to know they are available. Thanks so much, Dr. Mark Newkirk of Newkirk Family Veterinarians, and I'm Robin Stoloff for Health Update.
Brought to you by Integrity Physical Therapy with 4 locations. Put yourself in their hands. And by the law offices of Richard A. Stoloff. Attention you expect, results you deserve.
At Ocean First Bank, our first thought is you. We put you first in all we do. Community banking for a century. We treat you like your family. Whatever you need, whatever you dream, let's make it a reality. Ocean First Bank, putting you first.
When your dream is building a new home, we offer mortgage options designed with your convenience in mind. Like combining your construction and permanent loan into just one closing, saving you time for the really fun stuff, like planning that housewarming party.
Whatever you need, whatever you dream, let's make it a reality. Ocean First Bank, putting you first.
Member FDIC, Equal Housing Opportunity Lender.
It's better at Burke Volkswagen in Cape May Courthouse. For the summer kickoff sales event, you can get a 2019 VW Jetta 1.4 TS manual lease for $199 per month for 39 months. MSRP $22,10, sale price $19,000, $1444 due at signing. Taxes, tags, and $675 VW acquisition fee additional. Total payments residual $77.61, $10, $7, $11.30. Dealer doc fee of $367.75 included in price. No security deposit required. Lease includes 7,500 miles per year with 20 cents per mile over. Offer expires 6/30/19. See dealer for further details.
This is Doug Burke. Let us show you why for over 105 years and 4 generations it's better at Burke. See us off exit 10 of the Garden State Parkway or at burkemotorgroup.com.
Find out why it's better at Burke VW. Better care, better service, better price. Now 107 years of better. Exit 10 off the Garden State Parkway in Cape May Courthouse.
Credit products are issued by WebBank, member FDIC. Rates and terms vary based on credit history. Amazon is not a sponsor of this promotion. Offer valid for loan products 90 days after today. Other restrictions apply. See website for details.
How do I feel? Awesome.
Like a huge weight has been lifted off my shoulders.
Hundreds of thousands of people are discovering the relief of a fixed-rate debt consolidation loan through Avant.
I paid off all my credit cards, and now I just have one easy monthly payment with Avant. And I don't have to worry about the rates going up.
Avant offers you access to unsecured debt consolidation loans from $2,000 to $35,000.
When I saw Avant was accredited by the Better Business Bureau, I knew that was the company for me.
Do you know how good it feels to only worry about one monthly payment?
Experience the relief of a debt consolidation loan through Avant. Plus, get a free $50 Amazon gift card after your first payment is made on time. To check your loan options and get this free offer, go to Avant.com and enter code 6363 when applying. Avant.com, code 6363. That's Avant.com, code 6363.
When we come back in just a few minutes, Tom Foley is here. Let me see how many formers I can say. His mic is on. How many formers can I say in 42 seconds? Former New Jersey Assemblyman, former Atlantic County Board of Chosen Freeholders, former Pleasantville City Councilman, former Battalion Chief, Atlantic City Fire Department, former Emergency Management Director for the City of Atlantic City, former Union President of the Atlantic City Professional Firefighters. I guess you were a state delegate of something at some point.
International
state delegate.
Yes.
How am I doing?
Yeah,
I'm
pretty
doing
good.
pretty good.
Yeah, and
I know my subject.
And also former executive director for Speaker Doria and Southern New Jersey.
Yes. and
I got all kinds of titles and no money.
And a very good friend. We're going to be back.
95.5 FM and 1450 AM WPGG Atlantic City. WENJ 97.3 HD3 Millville.
Iran's president says President Trump has lost his mind. I'm Chris Foster, Fox News. That's in response to asset freezes placed on Iran's supreme leader and some Iranian officials.
Iran's foreign ministry saying the new American penalties mean the permanent closure of the road of diplomacy. The sanctions target Iran's supreme leader, among others, President Hassan Rouhani, saying, how can a person lose their mind